Hello, everybody. Welcome back to Project Overflow. We're so glad you're here with us. If this is your first time here with us, do look at our description and you'll find out that, we're two Malaysians. We're not professional financial planners or, some guru here, but we really want to share our experiences here with you as Malaysians, as Asians. Okay, I think we're about the same in terms of where our lifestyles are, and really want to bring some experience to you so that if, no matter whether you're 20 years old or you're 50 years old and you're starting out, or you are now at the tail end of your life, there's still something you can do about making sure that you're dealing with your money correctly. All right, do like and subscribe. Definitely, okay, if you like the content that you are watching. All right, guys, let's get back to that interesting topic that we've been talking about. The last episode, we stopped at looking at a few portions of insurance and why that is. If you missed that, don't forget to look at the description and watch the previous episode before coming to this. Actually, watch the whole series, okay, because it's part by part. Okay, so today we want to deal with the next part of insurance, which is the whole portion of how does this become a robot. We're gonna sum it up, but also look at how does this become a robot to actually help you build your legacy or your money. Okay, instead of taking every month drawing money from your savings, or from your earnings to pay for insurance. Zuan, so how does this happen? Okay, so I know you stopped previous episode on we had that example. Let's take the example back where if you have a debt, or you're a businessman and you have a business and factory and all that, and you're on loan on that, and you have a $3 million loan, so you should have a $3 million insurance policy to cover that if today there's something unforeseen happens to you and you can't continue that earning anymore. So how do you most people take that money and straight away pay off, right? So then your family's out there, but you have a different perspective to it, and I'd like you to share with our audience.
Yeah, okay, this is not just a perspective, but also I apply it as well. I apply it as well. Instead of 3 million, let's use a very actual example that I how I deploy this is let's say you have a property. Okay? I think all of us have a property because for business there's something called a key man insurance to take care of 3 million worth of that. But let's make it for more practical for everyone. Let's say we have a house, and if you're living around Klang Valley here, is minimum is at least 1 million. Okay, anywhere plus minus. So we take 1 million to calculate. So if let's say you have a balance of $1 million a ringgit worth of debt, okay. So
Yep.
and I have a life policy of 1 million. So if I pass away, the insurance company will pay out 1 million, right? And the typical way of doing it is taking that 1 million and clear off that 1 million ringgit in debt, which is
Yep.
sounds quite good, better than being in debt. Okay, but what happens is that 1 million is gone. All right, is immediately gone. That means the family is left with nothing. The bank gets everything. At least you get house over your head. So what I did, like I said, I use an actual example is this, because instead of paying off 1 million ringgit in debt, paying it away, what I did was I take 1 million and put it into something which is called a cash trust. Okay, so the function of a cash trust is this is not like any other investments. Okay, the cash trust, the function of it, or the job is to preserve the capital. It's for capital preservation, and the bonus is it will pay out a
Dividend.
dividends every year, which is ranging between 7 to 9%. Okay, depending on the size of your and also how well the market performs. So instead of now taking that 1 million and paying off the house loan, okay, I put that 1 million into a cash trust, which gives me about 8% actually a year, with the capital guaranteed. Okay, with that 1 million guaranteed, plus on top of that 8% a year, which is 80,000 per year. So I use the payout to pay to service the house mortgage. Okay, and it brings down my house mortgage. I don't have to pay so much anymore, and after calculating it, it takes me about 10 years, okay, to finish paying the house with this 1 million in the cash trust still there. So if after I finish paying off the house and if I can pay more, it takes less than 10 years. But if just by doing that, that I will own a house. After 10 years, I will own the house and I still have this 1 million, which is still paying me 8% a year. So now I have 2
Wow.
million
Wow.
by just doing that instead of taking that money and clearing off the loan and I just end up with one house. So
Oh,
that is the strategy that you can actually use this and pass it down to your generation. Even if you're not around, your children, your children's children can continue getting paid when
amazing.
you're not here. When you're not here, and
Amazing.
the capital guaranteed. So let's say emergency, then they can, if they really need, they can take out the money and do whatever they want with it.
Wow. Okay. Okay. I think we need to slow down a little bit here because you cover a lot in that few sentence. Okay. So let's rewind a little bit. Okay. So what Zoom was saying is that let's say you own a house today and you need to service your loan. Okay. Most home loans are actually for 30, 40 years. Okay. So you buy a house and you take a loan and it gets amortized over 40 years, meaning you're paying capital plus interest for 40 years before you pay off this particular house. Okay, so what Zoe is saying is, instead of now putting vehicles, the first very important function would be capital protection, meaning you don't want to lose this money because this is supposed to be for paying off the house. So instead of now taking the cash that you earn, paying off the house, he actually now, increase that sum and put it into a cash trust. Let's say a $1 million cash trust that pays him 8% per annum. Right? Craziness. Okay, so this money. Specifically, so he probably has got a few cash trusts. Okay, so one, let's say for the home. So now he takes the 8% and pays, right? So 8% of 1 million, $1 million, what, 80,000. 80,000, right? So if you look at it, right, you don't pay 80,000 for your house. Okay, so you pay a lot less. Okay, but if you actually now put it away, so 80,000 goes and pays off your monthly installment plus some of the capital, which now reduces the time that you need to pay for your home loan. Okay, down to about 10 years from 40 years. This is absolutely mind blowing. Okay, so of course, we are talking about if you have already 1 million in your hand, but if you don't, then as you build on it, maybe 20 years you'll be able to pay this up. Okay, which means that the next 20 years you probably have enough money to buy another property, or you can start another cash trust, maybe, right, for a different purpose. Let's say a holiday a year. I don't know, 80,000 can take you to a lot of places. Okay, or whatever that you need, your needs may be, right? But this is a fantastic thing because if you have paid it out into the loan, then the property will be your only asset. Now you own a property while you have the capital still in your name that is still earning you 8, 7 to 9% every single year. This is mind blowing, guys. Okay, so if you didn't catch this, okay, rewind and watch again, rewind and watch again. Okay, so let me ask you this question before we go on. What is the minimum? Like if someone wants to start, what's the minimum they can start to formalize the cash trust?
It's there's a few.
Averagely, yeah.
Averagely, okay, I think about 60,000 to start one cash trust. You will get one what we call a trust deed. Okay, it's like when you do a fixed deposit, you get a certificate of deposit, right? So for cash trust, you get something called a trust deed. So now it's about 60,000, but for me is I realized that during these pandemic times, certain cash trust company, they are opening up and lowering the barrier to entry to about 30,000, 10 to 30,000 now.
Wow.
But the returns is not that high because the purpose of it is to preserve the cash, not to focus on the returns. The returns will be about 6 to 7%, if I'm not mistaken.
Yeah. Okay, guys. So you heard it right. 30,000. I think a lot of people, if you're living in KL and you're in your 30s or 40s, then if you don't have 30,000 in a bank account, then really, you really need to listen to our podcast, okay, and listen to every episode of it. But if you do have, what are you doing with it? If you're leaving it in a bank, then you're only being paid what, 2.5 to 3%, okay, compounded. I don't know, I don't think you can even pay the inflationary expansion that we have every single year. So placing it in a cash trust, number one, it keeps it safe. Number two, you get the returns of it that you can go and pay off your debts and and things like that. So that is a great, this is what we call a robot. This is what we call a system which is complete, right? Something that works on its own and pays off something that you have acquired. All right. So this is fantastic because then you have peace of mind. Now, after a while, where you can accumulate another 30,000, you can actually have a 60,000 cash trust, and then as you keep growing, then you can be 100,000 one, then up to $1 million, $10 million. It really depends on where you are and how you're doing this. Okay, but this is what we call a robot or a servant that works for you. Let money work for you and don't just work for money. This is unbelievable. Was there anything else within this insurance? It's going to be a little bit longer this episode, but is there anything else in the insurance that you would like to talk about,
Yeah,
Zuan, so that we can complete
as
this?
correct. For any robots or any staff, it's very important to do a review. Okay, annual year review. Okay, performance review, and if something is not working, cut it. If something is not really doing well, if you don't need it, also cut it. But certain things are doing well, make it better. So I
Yeah,
guess that is I know it's very boring, but now every year I actually enjoy looking forward to my annual
review.
review, because then I know uh, I'm more aware of what's going on, and what do I need, what do I don't need,
Yeah,
and my advice is just get started, because when I sit down with my financial planner as well, he actually told me this. Do you know that a lot of Malaysians, right, don't want to know? Okay, no news is good news. They don't want to know. They say ignorance is bliss, right? No, this this ignorance is not bliss. Okay, because he's been in this industry for many years, and he gives free reviews, right? And not many people want to take it up because they're afraid. Number one, they're afraid
shy,
and
shy.
afraid, shy, yes, and they're shy, and I was like, what, free also don't want. Yeah, he said, but that is the attitude that Malaysians have. Is really number one is ignorant, or just fearful, or something that
Yeah,
don't know what's holding them back. But
yeah,
my advice is really just get somebody, a financial planner that has the heart to teach you, instead of pushing you products, but to teach you, to help you to understand, so you can be a more uh, learned or more educated, not buyer, but more of a consumer and a customer, because at the end of the day, it's something that will serve you long term, 10, 20, 30, 40 years, if you get this right. So that's my
yeah.
advice before we wrap up.
Yep. Okay, so thank you so much, Zuan. I've learned so much, so much, so much, right? I think some of this we have talked about, but others, it's just now drumming it in. I'm in the later part of life in the sense of, my productive years. I know there's a lot more to go in terms of that, but, in terms of a corporate, then people say, wow, you're almost 50, kind of thing. But, even then, I think that, there's so much that I can do now to start, right? So and really this episode, if you're here with us, thank you so much. But really, there are three groups of people that we want to address here. Number one, if you're young, okay, if you're just starting out, okay, it doesn't matter whether you have a small job, big job, whether you're a degree holder or not, everybody makes an income, and everybody, your income is 100%. So how you apportion this income to be able to set you up so that now where you start, really you cannot choose, but where you end, everybody can choose. Okay, so when if you are young, take take heed. Okay, listen to what we're saying here and start this process. Okay, just start the process, find out more. Okay, spend more time in knowing about your own money and your own life rather than giving that to the government or to your bosses or to your employer. All right, so the second group of people are people who are now in, you are in your 30s, 40s. You think that, oh my goodness, it's too late for me now. I should have started. I heard a lot of this. I should have started earlier. If only I started earlier, then now I'll be set. Okay, there's no such thing. You can start now. There's never, 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 ever too late. Okay, start now, and at least you're building something from now. It could be small, but at least you're also teaching your next generation, your children, and the people around you about this, so that they can perpetuate this. Okay, and the third group of people are those people who now are, are seniors, and you think that, oh my goodness, I don't want to engage a financial planner because I'm a GM, or I'm a director or CEO. Who cares, what title you hold? You may be very good at manufacturing, but you don't know anything about financial planning. It's fine, because 90% of the world does not know how to manage their money. Trust me, they don't know how to manage their money. They can manage their boss's money, their company's money, but they've got no idea when it comes to their personal money, because there's just so much emotion involved. All right, so guys and ladies, if you're here, really re-listen to this entire series, because really, it's really, really powerful. If you take this one key from us, you will get one part of your life set up really, really well. Okay, so we've taken too much time in this episode, but I think it's so important. Thank you so much for listening. Thank you for coming. Remember to like and subscribe, and also ask your questions, okay, in the comment box below or in the link. Okay, we've got a Google sheet there where you can stay anonymous, but ask your questions so that we can answer them in future episodes, to be able to be specific to the questions that you are asking and the situation you're going through. All right, we love you. We'll see you in the next episode, and do stay safe as we open up the economy and open up the doors and mingle around with everybody else. Take care. God bless. We'll see you in the next episode. Bye bye.